All right, ladies and gentlemen, welcome back once again. This is lesson 11 of our Forex basic beginner course. And in this lesson, I'm going to talk about the different types of brokers. Okay, so we have two different categories. We have dealing desk brokers, and we also have non-dealing desk brokers. Okay, all right, so let's talk about dealing desk brokers. So dealing desk brokers, these are market makers, and they take the opposite side of your trade. All right, so let's say if you place a sell trade, they'll place a buy trade. All right, so what that means is if you win, they lose. If you lose, they win. All right, and yeah, you may ask, is this legal? So this is how their business model is designed. All right, so they have a few advantages. They offer fixed spreads, right? And they're also likely to let you trade nano lot sizes. Okay, remember, nano lot sizes, these are very small lot sizes. Okay, all right, moving on. So let's talk about now the non-dealing desk brokers. So under non-dealing desk brokers, we have two types. Okay, we have the STP brokers. Okay, STP stands for straight through processing. Okay, so straight through processing brokers. And we also have ECN, okay, which stands for electronic communications network brokers. All right, so let's talk about now the STP brokers, or the straight through processing brokers. All right, so these will provide you a link to other liquidity providers, let's say banks, hedge funds, and other brokers. Okay, all right, so they'll offer variable spreads, and I'll talk about this later in the example. Okay, so they're unlikely to let you trade nano lot sizes. Okay, all right, so let's look at the illustration or the example. Okay, so let's say in the middle right here we have your STP broker. All right, then on the left we have the trader. Okay, and on the right we have the liquidity provider. All right, so what the STP broker will do, they'll provide you that link to the liquidity provider. All right, but the way the business model is designed, they make a profit by marking up the spread. Okay, so what marking up the spread means, let's say your liquidity provider is listing the currency pair of the euro USD with an ask price of 1.0045 and with the bid price of 1.0041. Okay, so the spread will be 4 pips. Okay, because remember, the spread is the difference between the ask and the bid. All right, so your broker will go ahead and list that same currency pair, which is the euro USD, with an ask price of 1.0045 and a bid price of 1.0038. Okay, so the spread will be 7 pips. And as you can see right there, the spread of your broker is different from the spread of the liquidity provider. Okay, so the difference is 3 pips. Okay, and this is how they make their profits. Okay, so hence offering you variable spreads. All right, so let's move on to the electronic communications network broker. Okay, the ECN broker. All right, so these will provide you a direct interaction with liquidity providers and other ECN partners. Okay, so unlike the STP brokers, these will charge a commission. Okay, all right, so they're also unlikely to let you trade nano lot sizes. Okay, all right, so let's look at the illustration. Okay, so once again we have the ECN broker right there in the middle. All right, we have the trader on the left and the liquidity provider on the right. Okay, So again, they'll offer you a direct interaction with the liquidity provider. All right. And the difference, like I said, so let's say your liquidity provider is listing the currency pair, the Euro USD, with an ask price of 1.0045 and with a bid price of 1.0041. So the spread will be 4 pips. Okay, so your ECN broker will list that same currency pair, okay, with an ask price of the same ask price, okay, of 1.0045 and with a bid price of 1.0041. So the spread will be the same. Like I said, they'll only charge a commission. All right, this is how the business model is designed. They charge a commission. Okay, all right. So the next question will be now, who should you choose? Okay, so it varies. Okay, so for dealing desk brokers, this will be the best option for new traders. Okay, because they offer you a way to trade nano lot sizes, which are small lot sizes. Because as new traders, most often new traders have small accounts. Okay, so let's say for an account of like $100, they might let you risk just $1. Okay, and how you will do that is by trading nano lot sizes. Okay, so dealing desk brokers, this could also be a good option for swing and position traders. Okay, because remember, they have fixed spreads. Okay, and swing and position traders are traders who hold their trades over a long period of time. All right, so let's talk about now the non-dealing desk broker. So this will be a better option for day traders. Okay, and the reason for that is because remember, day traders are traders who are actually trading every day or looking for trades or setups on a daily. Okay, so for non-dealing desk brokers, most especially the ECN brokers who offer just a who charge just a commission, would be a better option for day traders. Okay, all right, so let's do a recap now. We talked about the dealing desk brokers, and we say these are market makers and they'll place trades against the trades you place. Okay, so if you place a sell trade, they'll go ahead and place a buy trade, and this is how their business model is designed. Okay, and we talked about this would be a better option or a good option for new traders because they let you trade nano lot sizes. And we also say it would be a good option for swing and position traders because they offer fixed spreads. All right, then we also talked about non-dealing desk brokers, and we say this is a good option for day traders, most especially the ECM broker who just charge a commission. Okay, and under non-dealing desk brokers, we talked about the STP brokers, okay, or straight through processing brokers. We also talked about ECN brokers or electronic communication network brokers. Okay, all right, so I've come to the end of this video. I'll see you in another one. Bye.